Welcome to Theo Trade. This is Don Kaufman. It's February 25th, 2019, and you are watching the Theo Trade evening video. Just about 10 minutes left in today's trading session, and we are seeing some what I would term key reversals in a number of individual equities and overall products. I'm going to bring you into that in just a minute. Let's go ahead and start with the S&P E-mini futures, which, tagged a very specific gravity point today. For those of you that have been paying attention anytime over the last, about 15 months, we've been talking about specific levels. Here we go. We hit 28.11 today. Again, 28.11. Let's actually zoom into a 1 day, 1 minute. You can even see some of the big volume spikes coming directly into, again, that's a price point of 28.11. That's a gravity point that we actually identified, again, almost 15 months ago now inside of the S&Ps, once again tagging that level. As we all know, 28.11 gets hit, it's kind of like checking a box along the way. Now, just because we hit the 28.11, and I want to clarify, this doesn't necessarily kind of construe that this is going to be a reversal inside of the marketplace. However, I do want to kind of zoom in. And again, I know there's a lot going on this particular chart. I'm going to zoom in for just a second and talk about how many times we've effectively been rejected, of course, just recently off of that specific level of 28.11. You know, you'd say third time's the charm, but of course, the third time that we did get rejected off the 28.11, that was the last time around. That actually took us into, of course, some of the hideous lows of December, only to see the wicked rebound back to the upside. Nevertheless, when you see the market reverse at this level, yet again, it almost, it almost looks like, oh, okay, this is too easy. It's far too easy. But again, we've seen some, what I would term key products also reverse. Speaking of which, the 28.11 didn't just reject us these 3 or 4 previous times. I mean, we can go back in time quite considerably over here. I'm actually going to pull up a 3-year daily and kind of zoom in. And again, that 28.11, again, we've been rejected off of that in numerous times. Much more recently, but again, this has happened in the past as well. Again, zooming in though to the 28.11, and now I'm actually going to take you to the spiders and kind of clean it up for you a little bit. This was, again, effectively the top end of what we kind of termed our volatility box. Does it necessarily, again, looking at that level, kind of rejecting off of it, does it mean that we're going to reverse? Possibly. But let me give you some added evidence to this, okay? One of the key products that's reversing today, and again, I'm not much of a market technician, but I do look, again, at key inflection points and kind of key reversals, and here's a big one. It's the financials, okay? The financials, let's just all be clear. Like I talked extensively about Boeing on the weekend video, which is obviously driving a lot of the indices, okay? But when it comes to a major sector, the financials are driving the bus. And quite surprised this morning. I wake up this morning and everybody was talking about the Berkshire Hathaway news over the weekend. Of course, if you're unfamiliar with that, Berkshire Hathaway, Warren Buffett comes out and absolutely bombed on earnings, and yet the XLF rallied, of course, on Monday morning. Why is that curious? Well, first of all, Berkshire Hathaway is the single largest constituent component of none other than the XLF, and you would assume that Berkshire Hathaway would trade down. Oh, on the contrary, it had rallied this morning. Again, now we're seeing kind of a key reversal, and you have to stay keyed into the XLF because the S&P 500, okay, sure, Boeing can drive some order flow towards it, but the S&P 500 simply cannot get it done. Can't get it done without those financials backing it. Effectively, what I'm saying, in terms of your strong sectors, okay, take a look at the financials pretty much on a year-to-date basis. In fact, with that, I'm going to pull it up on a year-to-date. You can see they're up about 10%. Now, there's going to be sectors that are going to outperform this, okay, but none of them are as important as those financials, which again have had a key reversal over here. Them coming right back into this 2650 level, again, is critical for the sustained rally the remainder of this week. We come under that 2650 level, and it's possibly no holds barred, once again, some sell side activity. All right, let's talk about some opportunities, though, with this. So if you were looking for a position right here, right now, what might be some of the most effective positioning? For that, I'm actually going to take you, first of all, over to the spiders. So the spiders, obviously, top of the volatility box. I'm going to cruise over to a style up here. Okay, under load style, and I'm going to do what's called a sector comparison. So all you're looking at over here is it's like a spaghetti incident, right? These are just, it's a comparison chart of different sectors. Now, this happens to be on a 1 year, again, a 1 year comparison. Bear with me momentarily is what I'm going to do is I'm going to take the time frame and I'm going to knock that time frame down to a year to date. Okay, one of the first things I want you to notice, okay, when you're looking at the sector comparison, when I talk about sectors, I'm talking about the XLK, for instance, technology, or in this particular case, the XLE, which is the energy sector, or, and again, I could just click on these, the XLY, okay, and it goes on, the XLU. All right, what do we have down below over here? The XLF, the financials, that's them right kind of in the middle of the pack, again, helping drive a lot of the S&Ps. As I was saying, okay, it kind of feels like we've seen some kind of key reversals. So I keep thinking about, like, what might be if I'm going to take a position, and I'm going to take a contrarian position right now, which effectively means in an up market I'm going to be looking for a bearish position. What might be one of the best of the sectors? And what I actually came up with may surprise you. Okay, on a year-to-date basis, all right, one of the best ones I can find, it's the XHB. What is it? It's the home builders. It's the XHB right up there. Oh, it's up. Okay, a loving 19%, again, 19% on a year-to-date basis, outperforming all of the other major sectors, which is shocking considering what? You know, they were getting absolutely decimated. Now, that is on a year-to-date basis. Nevertheless, we've carried positions. I'm going to snap to a longer chart. We've carried positions in the XHB. And carried a significant number of positions in the XHB. Back in the time frame just over a year ago, right, we actually carried a duration position all the way from the beginning of January of 2018, right just previous to the major breakdown. So we actually exited somewhere around, okay, this kind of 38.39 handle, and that was some time ago. Nevertheless, given the fact that this thing has staged an absolute wicked rally, I'm not saying our timing is going to be absolutely perfect, but if you're going to look for a pullback, what better time? Again, it staged one of the largest rallies on a sector comparison. Clearly, it's the outperformer. I mean, you think technology is ripping? Yeah, that's nothing compared to the home builders. So how do you actually build a position, okay, in the midst of this? One of two things. You can even build, okay, what I would term a duration position, which is buying a deep in the money put. Now, a duration position signifies one thing. Looking for duration. You think that the XHB would be down a considerable amount over a considerable period of time. Duration denotes anything more than 3 months for me. All right, so I've got a duration position. For those of you that are a little bit more maybe short-sighted, there's nothing wrong with being a little short-sighted. You might want to look for something like an in-out put spread. Again, that's something I could build for you guys live in the chat room tomorrow morning, an in-out put spread. Nevertheless, taking a look at this on an intraday basis, once again, you see the financials kind of reversing. Now we've actually got the XHB reversing. Another underlying that I've actually been eyeballing, okay, here's one that I'll probably build some trades on tomorrow, happens to be none other than Starbucks, which has been really the little engine that could. On a percentage basis year to date, it's not all that awe-inspiring. It's up about 10.5%. Nevertheless, when you start looking at Starbucks, and I'll bring it up over a much broader period of time, Starbucks has, done absolutely nothing over the last 3 years and has exploded to the upside now off some of the recent lows. Nevertheless, if you're looking, again, for a strong contrarian style position, you may find it right here in Starbucks. Once again, looks like kind of a key inflection point. The stock had a heavy reversal today off that kind of 72 level, kind of rejected, and has headed a little bit lower. Again, I will build a number of trades in Starbucks live in the chat room tomorrow. Here we are with just seconds left in the trading day. Well, people, this is pretty much what we call kind of a full-fledged reversal. The high today, 28.14. Where are we going to close? Just about 20 handles lower than that. With that, stay tuned for just a moment here because I want to tell you a little bit about our upcoming live trader event. Hey, Don Kaufman here. From May 30th to June 1st, the TheoTrade team will be hosting the Volatility Strikes Back live event in Scottsdale, Arizona. Here are the top 10 reasons you need to attend the Volatility Strikes Back live event. Number 10, perfect your trading. I don't know about you, but I've never been a fan of guessing. I want to know exactly what I'm doing wrong and how to fix it. Find out the right adjustments to your trading. You can have one or more TheoTrade instructors look over your shoulder to get your trading right. You can't get that anywhere else. Number 9, trading can be hard, a bit lonely, and sometimes just downright scary. Get out from behind your computer and join like-minded people. You'll realize you are not alone. The TheoTrade community is amazing. You can't always talk to your friends or your family about what you're going through. And at Volatility Strikes Back event, you'll find traders just like you. Some of them further down the road than you and others behind. Together as a community, we can make it happen. Number 8, volatility is so very back. Now is not the time to slow down your trading education. Now is the time to accelerate your learning because there is a ton of opportunity in the markets. Find out what's missing in your trading and create a unique trading plan just for you. Number 7, want to get away? Does your life remind you of one of those want to get away Southwest commercials? Well, if you need to get away from a nagging spouse or screaming kids, then the Volatility Strikes Back is your ticket out. I know it's mine. Number 6, you are who you hang out with. I like this quote. You're the average of the 5 people you spend the most time with. For the last 20 years, I've spent most of my time around 20, 30, or even 40-year veteran professional traders. Being around like-minded people helps you focus, encourage, and sharpens the saw. Number 5, trading is a competitive business. You're competing against some smart traders out there, and those that come to this event are going to have an edge that you won't. Full immersion into a subject is the best way to learn and absorb the information. At home, there's a lot of distractions that can take you away from focusing on your trading education. Enjoy a 2-day immersion into your trading without any distractions that will take your trading to the next level. Number 4, have a lot of fun. Join us and you're sure to have a great time, accidentally or on purpose. If you're the most parts of the country, you're used to wild weather. Scottsdale, Arizona is absolutely beautiful in late May. The weather is perfect, not too hot just yet. So bring the spouse or kids and have a great time. Number 3, resort discount. We have an incredible discounted rate for you at a 4-star resort in Scottsdale with the typical resort fee waived. Plus, breakfast and lunch are included. Our room block is filling up fast, so join us while you still can get that fantastic discount. Plus, if you wait any longer, flight costs will increase. Number 2, work on your trading. You need to take time away from trading to work on your trading. If you're like most traders, you're so consumed with trading that you forget to work on the strategic level of your trading. When you work on the higher level strategy of your trading, that's when you're going to see big results. Number 1, be with professional traders. All of the Volatility Strikes Back instructors are professional traders. Don, Tony, Corey, Jeff, Matt, Slim, Brandon, we are all going to be there and ready to answer your questions. You know, you can go to a seminar anywhere and spend $3,000 to $5,000 for a live event to get generic trading information. Or you can come to the Volatility Strikes Back event and get specific information at a fraction of the price. Whether you trade options, swing trade, or intraday trade, you'll get the specific information and the case studies that is directly related to your trading. You do not have to trade alone. TheoTrade is here to help. Don't miss out on this event, May 30th to June 1st in Scottsdale, Arizona. Go to theotrade.com/live. Again, that's theotrade.com/live. Or click the Add to Cart link, and I'll see you in Scottsdale in May.